So first, let's try to understand the difference between government, not-for-profit, and the general business. First, what is a government entity? There's so many types of government. For example, we're talking about federal government. We also have the general purpose political subdivision, such as states, counties, cities, towns. We also have the special purpose subdivision, such as school district or the fire district. Also, we have the public corporations, such as toll roads, toll bridges, and other statutorily created entities, if they possess governmental characteristics. Now let's look at the statistics to understand the scale of governments. It's really huge. Okay, this is 2012 U.S. Census data that shows the number of local governments, talking about counties, township, right, school district, municipalities. Okay, if you look at these numbers, we have a lot, really a lot of governments. 3,031 counties, 12,880 school districts, and more township, municipalities, and special district. So in terms of scale, it's huge. Then, for not-for-profit organizations, also known as not-for-profit or NFP. Okay, this is an organization that receives contributions without expectations of equal value in return. Right? Obviously, not-for-profit do not exist to make profit. They receive contributions, right, from donors, and in return, they provide services to people in need. In particular, they typically furthers a particular social cause or advocates for a shared point of view. Okay? By any means, they're not here to make profit. They lack business type ownership. Okay, they do not pay dividend. So it's very easy to see the difference between a not-for-profit and a business. Let's look at the statistics for not-for-profit organizations. And this is the data showing the change between 2005 and 2015. For example, if you look at the number of registered nonprofit increased from 1.4 million to almost 6 million during that past decade, and showing a 10% increase. And if you look at the revenues, okay, well, it's increased by 56%, right? Or total assets increased by 65%. So in terms of the scale, okay, it's also huge. It's also huge. So we do need to pay attention to both the government and the non-profit because it's an important part of the economy and society. Right. Sometimes it's not that easy to differentiate governments from a non-profit because both are not making profit. So how do we know whether it's a non-profit or it's a government? So sometimes we have organizations created by a government, by a non-profit corporate law, okay? are considered to be governmental if any of the conditions hold. For example, officers are elected or controlling majority of the government bodies are appointed or approved by governmental officials. Or they have the power to enact or enforce tax levy. Or they have the power to directly issue tax-exempt debt. Or another government may unilaterally dissolve and assume their assets and liabilities. Okay? If you find any of these characteristics, then this organization is a government. It's not a non-for-profit. So let's combine the government and non-for-profit. Compare it with a business to see what are the main difference. Obviously, the mission is different. Right? And for the business, its mission is to make profit. And rather, the government and non-profit, they exist to provide services, okay? To provide services. They do not have a profit motive, never. If you look at the governing force, the business is governed by the marketplace, but the government and non-for-profit, they are governed by the budget. So the budget is a very interesting difference between government, non-for-profit, and a business. Right? For business, we also have the budget, but it is usually used internally, right? Helping managers plan and make profit. But the budgeting process is the key to the government and non-profit. Because the budget determines how an entity obtains its resources and how it allocates or uses those resources. In other words, it encapsulates most of the key decisions made by the organization. For example, right? A non-for-profit may receive contributions to provide food to those with limited financial means. Okay? So when preparing its budget, the non-for-profit will need to plan for only expenditures for food being made from the contributions that it has received for that purposes. And for government, budgets can be even more important because they have the force of law. For example, when the city council passes the city's annual budget, okay, it provides a legal authority for the government managers to make expenditures. Therefore, the manager cannot spend extra money, for example, to pay for the salary of the employees in the department. Right? They cannot do that. Because all the amount has been appropriated by the city council based on the budget. Right? So we're going to discuss budgeting issues in the next lecture. Of course, all the accounting are related to the budget. That's why it's a key. And other differences, for example, in terms of budget, as I said, the business has budget for internal use, and those are typically multiple year budget. But for government and not-for-profit, typically it's a single year budget. Okay. And in terms of inflow resources, for example, revenues, we know most of the revenues of business are from the exchange transactions between the buyers and the sellers, for example. But most of the revenues for government and non-profit, they are from non-exchange transactions. Okay, in other words, the government and non-profit, they are not anticipating any return when they provide a service. For example, there's no direct relationship between tax paid by individuals, taxpayers, and the service provided to those taxpayers. Right? There's no direct relationship. Okay. All right. So let's move to the next slides. Let's talk about accounting principles and standards. Let's first talk about standard setting authorities. The Financial Accounting Foundations, or FAF, appoints 7 board members for both the Financial Accounting Standard Board, FASB, and the Governmental Accounting Standard Board, GASB. Should be GASB, right? GASB, GASB. So basically, FASB set gaps for non-governmental, not-for-profit organizations, as well as the business. And its authoritative document is a FASB codification. It's the only source for authoritative standards. The GASB sets gaps for state and local governments. Okay? And authoritative documents include 2 categories. Category A, we're talking about a GASB statement, which is a main source. Also, we have category B, includes technical bulletins, implementation guides, literature of AICPA cleared by GASB. Those are category B. And sometimes if we couldn't find a particular standards for particular situations, right, practitioners may consider applying accounting principles for similar transactions or by analogy. For example, you can find similar standards from the FASB publication, from the FASB codification, or we may look at non-authoritative literature. Okay. Then for the federal government, we have the standard setter, the Federal Accounting Standard Advisory Board, or FASB. FASB sets gaps for the federal government. The FASB is the youngest of the 3, right? FASB and the GASB, they are born together, basically. When the FASB is 1973, then GASB is 1984, from the same parent, which is Financial Accounting Foundation. And then FASB was born later in 1990 from this Chief Financial Officer Act of 1990. At that time, right, people were worried about the inefficiency of the federal government because they thought that the federal government was wasting too much money, basically. So because of this act, it established CFO for fiscal management within the Office of Management and Budget, OMB. It required selected agencies prepare annual financial statement and make them subject to audit. Okay, so as a result, three agencies together set up the FASB, which is the Department of Treasury, the Government Accountability Office, GAO, and then the Office of Management and Budget, OMB, jointly created the FASB. And the FASB is recognized as a standard setter officially in 1999. Okay, was founded in 1990, officially appointed in 1999. So it's a very young one. Now let's talk about the general purpose of financial reporting for government and not-for-profit organizations. Right. Basically, the purpose of financial reporting that those financial reports should help users, right, assess financial conditions of the organization. For example, whether the state and local government they have enough resources, or the revenues are sufficient, okay, to pay for the current services, okay, their financial conditions, and whether those resources obtained are used in accordance with the budget. Okay, so we compare actual results with the budget, and to determine compliance of the current law and rules and regulations, and eventually evaluate the efficiency and effectiveness, right? Whether, for example, whether a government service, right, or its efforts, costs, and accomplishment has been disclosed properly, so users understand all those things, or whether they have wasted money. Okay, so it's inefficient, right? Inefficient. These are the general purpose of financial reporting. Next, let's look at the GASB objectives and FASB objectives, respectively. For example, the GASB objectives include accountability, evaluation of operating results, levels of service, and ability to meet obligations. These are very consistent with the general purpose, general objectives. For example, if we look at accountability, the GASB is focused on three. First, inter-period equity. Okay? Inter-period equity means the financial reporting should provide information to determine whether the current year revenue or sufficient pay for current year services. Okay, that's interperiod equity. So we need to pay great attention, for example, in the governmental accounting to see whether, right, the money or expenses has been shifted to future years. Okay, to future years. I think that's one of the focus of the government accounting is whether we shifted cost to future taxpayers. Okay, if you want something, better service, or you're going to pay for it. Okay, you cannot spend money then leave the cost to future taxpayers 10 or 20 years later. No, we cannot do that. That is interperiod equity. Rest of this budgetary and fiscal compliance, as I said, all the money spent has to be used in accordance with entity's legally adopted budget, and also has to demonstrate compliance with all the legal or contractual requirements. And then the financial reporting should provide information that help users to understand, right, the effort, costs, and accomplishments. Okay, so we're not going to go through all these details, but they're easy to understand. But that's a GASB objective. For the FASB objectives, if you have taken financial reporting or financial accounting courses, we have seen this many times, basically, right? The objectives is to provide information for decision making about allocation of resources. Right, and also assess how managers have discharged their stewardship responsibilities, the safetiness of the asset, right? And economic resources, obligations, and effect of transactions that it can impact. Right, and finally, explanations and interpretations of the financial information. So all these are the FASB objectives. As you can see, the GASB and FASB objectives, they are related, but obviously they're somewhat different. Right, so you can see this is all for lecture 1. Basically, we summarizes the differences in the environment for the government, non-for-profit, and the business accounting, basically. All right, see you next lecture.